Okay, so that's based on those last three candlesticks you see to the right of the chart. So this is based on the last 3 years of data. So this is, anywhere from 20 to 50 days of data where price is showing up. The same pattern is showing up over and 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 over again. That's why you have to back test. I met a guy today who's been trading for a year and a half. I guess nobody told him, and he didn't know, but he was telling me he don't back test. He just trade live and stuff like that. And I was telling him that usually there's nothing wrong with not back testing, but usually the people who don't back test have already been consistent for a long time, and it's like they don't feel like they need to back test anymore, which kind of makes sense in a way. All right. So the last candle we have right here is the bullish candle. And if I pull up the rules again, you see this is the pattern: bullish, bearish, bullish. It says right there, you can see it. It says buy up. It says buy up TP1 5 points for sure. Now remember, this is everything you're seeing right here. This little bit of data is based on 20 to 50 plus days of data, because this is the last 3 years of be back testing. When it's not back tested every day, I back test it every day, but I do this based on a certain type of pattern forming. I'm not going to say what that is. Okay. But the whole point in this is for you not to know exactly how this works. It's for you to see what trading rules, a rule strategy looks like. Right here, it says TP1 5 points. Then it says TP2 11 points, right? So what you see over here to the right is you see these measurements. Okay. So you see 5 points measured from the bullish candlestick, the last candle you see. This candlestick right there, that bullish one, that white one, you see 5 points measured up. Why? Because that's what the rules said. After back testing for 3 years, that's what the rules told me I should do. So I have no fear of taking a buy because it said I can get at least 5 points for sure. Okay. And so that's what you see right there. And that's what the green lines are my entries. The pink lines is the TP. Okay. The next one, the next TP, it says 12. Why do I have a pink line right there and 12 points measured up? Well, let's go back to the rules. I'm going to keep doing this. The rule said TP at 11 points or negative 39% Fibonacci. Don't you see negative 39% right there lining up with the 5 points? So I knew for sure I could take that and get 5 points. 5 points can add up to a lot if you have a certain amount of leverage on your trade, and if your account size is a certain size. 5 points could be something. So this is day trading. This is not, knocking it. This is vultures. Like I said, steel vultures. We're just getting meat off the carcass bone. We're not trying to get the whole move. We just want 10, 15 points, sometimes 30 points, sometimes it may be 50 or more. Okay. That's what this is. So then we're going to drag the chart to the left and we're going to see what happened. Okay. Boom. So the next candle was a huge bullish candle. We got our 5 points and it went straight to what? 12 points. Really, my thing was 11 points because remember the rule said it would go up to 11 points, but it went up 12 points, right? Now what do? We out the trade. Okay, this is exactly when this pattern set up. I'm not going to say what the pattern is and all that. I'm just showing you what rule base look like. Now, what do we have down here? We have an orange line. Now, this is the stop loss. Now, you see that last candle over there to the right. If it didn't push up and it reversed and went down, I have a stop loss down here where the orange line is. Okay. And that's a 15-point stop loss. I know that's a, crazy amount to lose, but I have it set up where either I would get out at, if price, actually I have it set up where based on the rules, I probably would have got out at 50% of this. And if price this, so that's how I have it set up. So I would have got out at 50% of this, meaning wherever this white line is right there. Let me color it up real quick. Okay. So right there, you see the middle point right there. I would have actually got out there. So that would have been about 7.5 points. And then if once price that would have been me getting stopped out. I would have been mad, right? Pissed off like you are when you stop loss get hit. But guess what? Game changer. Stop loss 15 points. Stop loss re-entry. See, with this strategy, you don't have to know my strategy exactly, but you need to figure out where your stop loss is, and you need to figure out where you're going to get back in at. It's not about getting stopped out. It's about where can I get back in at after looking at years and years and years of data, not guessing. My stop loss, I got stopped out at 15 points, right? Or 7.5 points, whatever. How can I get back in and get